Welcome to Hot Topics on the Edge of Show. I'm Richard Carthon. I'm here with my co-host January Jones. And today we have a special guest joining us from Relm who will be joining us towards the end of the show.
Coming up today, Aave growth, Crypto Week in Congress, and FinTech risk.
This episode is brought to you by Relm. Relm crafts insurance solutions that give businesses in dynamic industries like Web3, AI, alternative medicine, biotech, and the space economy the protection to innovate and thrive. Where emergent industries have previously battled uncertainty, Relm is making innovation resilient.
This is another production of the Edge of Company, a rapidly growing media ecosystem, empowering the pioneers of Web3 technology, culture, and innovation. Let's get started. Well, first thing, we're talking about a big milestone in the DeFi world. The DeFi platform Aave recently hit 50 billion in deposits. Aave lets users lend or borrow crypto without a bank, and it's currently deployed again across 34 blockchains. In January of 2024, their net deposits were 12 billion, representing a massive jump of 316% in just about 18 months. Now, much of that growth seems to be due to institutional adoption because Aave has permissioned, compliance-friendly pools designed for compliance for financial entities. So, Richard, we're seeing this company, go huge just in the last 18 months. But as everything is changing in this space, do you think this is just the start of seeing a lot of these DeFi platforms kind of rise and fall as new laws come into play and different platforms become, easier to work with given the regulatory laws?
I do. I think this is huge news for Aave and a lot of DeFi platforms that are out there. It's really awesome to see just the growth and that's happening in the space. But there's things that like Aave supports stablecoins like USDC, PayPal's BYUSD, and the fact that it's across 34 blockchains. It's not just about decentralized lending. It's about creating a foundation for programmable finance at scale. And we keep talking about what does it mean to get to mass adoption and provide tools for people who are in the traditional world of finance and bridging over into the world of Web3. And it's companies like Aave in the DeFi sector that are really building a lot of those bridges. You have so much institutional grade infrastructure coming in, and they're starting to explore what does it mean to do things in the world of DeFi. So I think that part is really awesome. But what's also important through this is its emphasis on risk frameworks, where a lot of DeFi projects unfortunately haven't stood the test of time, is that they didn't have really good risk in place. Things like KYC enabled environments for like compliant real world asset vaults and not going past a risk layer. You don't have things like Terra Luna happen in other DeFi projects like Celsius and other things that could quickly cripple and make things go in a negative direction. So it's really awesome to see Aave continuing to grow.
Yeah, well, they had the right features at the right time that this legislation is coming through in the United States, which we're going to talk about in a minute. But with the growth of this industry, I imagine, it's going to continue to be a race for the best platform. So it may be them right now, but in 6 months, seeing the scale of this, I would imagine so many other people want to get in the game and compete for all this industry business.
I think competition will continue to go, but one of the things that Aave's done truly that I think is going to continue to set itself apart, for DeFi to be successful, you need volume. And one of the ways that you get volume is getting large players to come to play. And Aave is getting these institutions because of how strategic they're being about their security and being compliant and doing all of these things. And I think they have set themselves up for success and for continued growth. But of course, you're going to have others that are going to try to come and capture some of that volume. But they're playing catch up at this point.
I think it'll be interesting to see how quickly these institutions could switch partners in DeFi, right? Because in typical contracts, it takes a while, but the way crypto is, people are used to hopping over as soon as they're done, right? If they change their mind, they want to be out tomorrow. So I wonder how that's going to kind of affect the flow here of business when these large institutions, maybe they want a better platform. Are they making people sign long contracts? Are they going to really have that choice? Or are they really trying to choose partners that they think are going to, be their partner for 18 months from now, not just doing what's best for the market today?
Yeah, and just to speak to that point, I think again, just in Aave's case, they've been around for quite a few years now, and they've been planning for the long term. It takes a lot to get institutional money to come flow through a decentralized finance platform, and the fact that they're on 34 blockchains again speaks to the work that they're putting in to uh, be differentiated and set up for success. So I'm curious to see where things continue to evolve, but I am not surprised that Aave is positioned in the way that they are right now, just for all of the work they've been putting in through the years to get to this point.
Well, they've probably been involved in Washington and legislation like most crypto companies have. A lot of the effort around the House votes on the bills we're going to talk about right now, including the Genius Act, have really seen an onslaught of crypto companies finally coming to Washington. We saw people around the table, invited to the White House, and it's just been a very intensive and active season for the crypto regulations. And so this week is what people were referring to as Crypto Week in Congress. And as of our recording on July 17th, we do see the House now posed as of, sorry, as of this recording on July 17th, we do see that the House is poised for final votes on three major pieces of crypto legislation: the Genius Act, which is the stablecoin bill, the Clarity Act, which creates a new regulatory framework for digital assets, and then the Anti-CBDC Surveillance State Act. And that prevents the Federal Reserve from creating or issuing their own CBDC, which has been a point of contention in getting this bill through the House this week at all. So, whatever passes with these votes, whether it's all three of them or maybe just the stablecoin bill, we're not sure. It will go straight to the president's desk to become law. And this is some of the fastest moving legislation we've really ever seen in the United States, outside of bills that had to come through for COVID or other, natural disasters in the country. So, Richard, you've got your ear to the ground. What are people saying? What are people saying on crypto Twitter, as we used to call it, about what they're most anticipating happens with either the stablecoin bill or the Clarity Act, which we haven't really talked about that much because a lot of people thought that one was a bit more of a long shot.
Yeah, I'll go into all three of those, but the biggest piece of all this is that this is a pivotal moment, not just in the States, but in all of crypto. There's a reason that Bitcoin has recently hit new all-time highs, that Ethereum is back above $3,000, that what a lot of people are calling for the beginning of the true bull cycle has kind of start to happen over the last week. And that is because one of the biggest complaints for most of the world as it looks to the West, aka what's happening here in the States, was a regulatory framework, understanding laws, and understanding like how would crypto be treated from a legal standpoint. And we're finally getting that clarity. It's even in one of the bills, right? So let's first start with the Genius Act when we talk with stablecoins. So this changes the game with having this framework for a lot of banks throughout the world, because now you potentially can start using coins like USDC, USDT, and several others that exist, with helping to move money faster and to cut down on costs that a lot of banks are having to do from processing. But it also opens the framework for companies potentially to create their own stable coins. So like there's a lot that is going to continue to be unpacked from this, right? So like what stops a bank from potentially one day creating their own stable coin? With this, not a whole lot. But understanding the legal parts of how this works is what's going to set the framework for how these companies are going to approach this and look at these different things. And then you look at what's happening with the Clarity Act, I think with that, if it goes through, it's gotten quite a bit of pushback just because of um, people in Congress not fully understanding the ramifications of what they're being like of what's passing. So I think that one could have a little bit more challenge with fully getting all the way through. But the one that like there has been just very clear and everyone is on both sides of the aisle have kind of been agreeing on is the Anti-CBDC Surveillance State Act, which is stopping central banking digital currency. I think that one has a really good chance to continue to move forward. So Crypto Week, as it's been referred to, has been all over the timeline this week. If you're on crypto Twitter, there's no way you haven't seen what's been going on. But I think the real big reason why people are really excited, and again, why you're seeing Ethereum have a lot of success right now, is with the stabilization of stable coins. Right now, one of the largest out there is USDC, which is a stablecoin on top of Ethereum. Um, it could open the framework for a lot of money to flow through that ecosystem, and not just that ecosystem, but a lot of other ecosystems. So I think this is a really interesting time for the world of crypto and what's to come next.
Yeah, I mean, passing all these at the same time, I mean, as a cautious person, I would be like, well, how do they all interact with each other and what have we not seen? You know, but that is kind of the lessons of legislating, I guess, that we all have to go through as a country. So I think that's more of so why the the second act, the Clarity Act, you know, has had more trouble because it is very complicated to explain to people. You know, people don't understand the implications, not even people in the industry fully of what these rules might be. And so, but the stablecoin bill, it does seem that people are pretty excited about that one, and that it has enough support that that could happen. And that's so fast compared to most regulations that the House ever passes.
So that's going to bring us to our third topic of today as we look at all of this risk assessment. And we're going to talk about fintech's evolution and if the industry is ready for risk. So I'm going to welcome a brilliant mind into the world of risk and innovation. We have Claire Davey, who is the head of product innovation and emerging risk at Relm, to join us on our final topic. Claire leads the research and development of Relm's strategic product innovation while managing potential risk associated with emerging sectors and technology. And Claire, it is an absolute pleasure to have you on the show today.
Claire, I'm glad you're here to talk about this because once I started thinking about that last story, I started getting really worried, right? Seeing these three pieces of legislation come all together. So FinTech is taking over, and it's meant a lot of things over the years, right? And it's in across sectors within the financial world. And FinTech companies face a completely unique set of risks. Many of them are handling third-party funds, they're managing critical infrastructure for financial institutions, or acting as regulated financial entities themselves. And yet, the traditional insurance market hasn't really caught up to this complexity to manage that risk. So, you've been leading product innovation at this space at Relm. Why is purpose built fintech insurance, which you guys support, so important right now?
Historically, the insurance market has viewed fintechs as two separate categories, so either financial institutions or technology companies, and not really seen how those two things interact, and the fact that their exposures need to be addressed holistically through an insurance coverage or insurance policy that responds to a number of risks that those entities are facing. To date, or within the insurance market recently, what we've seen is that fintechs are pushed into either purchasing a financial institution's professional indemnity policy, which is quite traditional, and also not really responsive to a technology company's risk, whereas tech E&O for those tech companies doesn't respond to the regulatory investigations. And I think, as you've just been talking about, one of the big risks and the big challenges that fintechs face right now is the increase in regulatory activity, and not only the increase in investigations, but the uncertainty that comes with regulatory change. So is this act going to pass? Is this bill going to pass? If it does, will there be any amendments? What does this mean to my business? How can we ensure that we're compliant with it? And where we're seeing that is not just in terms of financial regulations like cryptocurrencies, as you've been talking about, but also, for instance, AI. In the US, you had sort of back and forth on federal AI bills, and in Europe, we saw the EU AIA Act sort of brought in, but then conversations as to whether it was going to be scaled back. And so really this lack of certainty for fintechs who are engaging with all of these emerging technologies to deliver their solutions, they don't really know where they stand. And I think they're looking for some certainty and resilience through different mechanisms, and one of those is insurance.
I think you bring up a really interesting point, which is people want to move fast and innovate, but they also want to make sure that they are protecting themselves for the downside risk. And one of the things that I think Relm has done a good job of and has been introducing is a way for people to do that, to be able to move fast and to be able to stay safe. And one of the ways that you've been doing that, I think, is through your two products, Omega FinTech and Nova FinTech. So like, what do they do, and how is that helping to solve a lot of the challenges that you just spoke on?
Yes, so I think you're right. They do want to move fast, and investors want those businesses to move fast, and the management of those entities want them to move fast. But if you move fast, there's also it's highly likely that you might break things or do things incorrectly, right? And so insurance is there as kind of a backstop, but also a safety net. And what we've designed with those two products, Omega FinTech being for those entities that provide the financial services, but use technological solutions to do so. And Nova FinTech on the other side is for the tech companies who are delivering the tech solutions to those financial institutions, but they're not actually providing the services themselves. Now, within these products, what we tried to do is really emphasize that no matter the cause of loss, whether that's a cyber attack, operational error, negligence, mismanagement, the policy will respond. And the policy will respond not by sort of saying, oh, well, it's in this bucket or it's in this bucket, but will just provide sort of reassurance that the same insurer is there to provide the support, and the limit is available across those triggers. So we've been looking at sort of the exposures that fintechs are concerned about now, and one of those is obviously decentralized technology within their solutions. It's also the use of AI, and financial institutions sort of regulation. And what we've tried to do is group those sort of liability covers together and complement those with sort of first party incident response, so that if an incident happens, we can get them back up on their feet as fast as possible to protect their earnings. And so really trying to provide that holistic safety net around sort of the contemporary exposures that fintechs are facing.
I think that part's important. What happened, I think, in the last cycle, just speaking to crypto for a moment, is that there's way too many people building quickly without thinking about all the ramifications of what if this goes wrong. And that's why 2023 happened with the collapse of a lot of different companies at the time. So with people having that in mind while still wanting to build and potentially being able to use these two products, why should this be top of mind for builders out there that are potentially listening to this right now, with making sure they have insurance set up for what they're building?
Yeah, I think it's understandable that if you're starting something and you're not going to have a robust governance function, right? You're not going to have a risk manager. You're going to be focusing a lot of your resources and time on doing coding, on software engineering, on developing, your MVP and trying to bring that to market and attracting investment. But I think what you can do as a fintech founder or fintech manager is look at it at insurance and your insurance carrier as your partner in that journey, right? So it's about using the underwriting process as a way of getting feedback on what are the top 3 governance priorities that I could focus on in the next year that are going to have the most impact from the claims that you've been seeing elsewhere. Or, for instance, can I speak to the incident response team to see what their feedback is on my IT security and kind of try and get some feedback from that standpoint. And then also, lastly, I think the insurance partner is there almost as a badge of credibility, I think, when you're talking to investment partners to achieve that growth. Having been underwritten by an independent insurer that's financially rated, I think does add some credibility to the resilience of the technology, but also the management of the organization. So I think that I would recommend using an insurance partner to really sort of add that additional credibility, but also provide some unofficial consultancy to growth.
Yeah, I know a lot of companies that are building right now. It's something that they need, especially to mitigate the risk, but also to present themselves as professional and also to have things in place for in case things go wrong, but also to think forward on I think also by thinking on what could go wrong, you're also positioning yourself on all the things that could go right and can grow your business even faster. So I really appreciate your perspective and sharing that information with us today. And I think that's going to wrap us for today. Just to recap on what we talked about today, we covered Aave's $50 billion DeFi milestone. We talked a little bit about US Crypto Week, and we wrapped it up with a deep dive into how fintech innovation is colliding with real-world risk and why purpose-built insurance is stepping in. So join the conversation on social and let us know what you think, because we're at the edge of crypto AI and where all the action is.
Thanks for joining us. I'm January here with Richard and our guest, Claire Davey at Relm. Stay curious, keep pushing boundaries, and don't forget to subscribe so you never miss what's next on the Edge of Show.